You said MSPs are not recession proof, resilient or resistant. And I think that that's absolutely spot on because if you've got a good percentage of your revenue from managed services, yeah. So you lose a project for a month or two or a quarter, you'll pick it up later, but the underlying revenue is still coming through. Your value is still there.
Yeah, it's what our data showed from, if you go back to the Great Recession in '08, that project revenue from both non-recurring products, so mostly hardware, and from project services dropped about 45%, and it did it within 1 to 2 quarters. So, and it's because a company's doing exactly what we just talked about, that I'm going to push this thing until I feel a little more comfortable about my business and my cash flow, etc. Managed services dropped about 20%, but that took about 2 to 3 quarters, like we talked about.
Peter Kujawa on the MSP zone. You I don't think I don't I think we started this at the beginning of the pandemic, and I think at that point you already moved over to ConnectWise by then, like 2020. Is that right?
October of 21. So I
October
was
20.
still
Okay.
running an MSP. I was still running LockNet at EO Johnson back in 2020. So I went through the pandemic, the early days, especially with all the rest of the MSP leaders out there.
So I want to get you're with ConnectWise now. You've got a very key leadership role there. I want to dive into that and what you guys are doing and what you have some really interesting data. You guys have always put out a lot of good data at Service Leadership. I want to dive into that, but I'm really curious. I know you going back, years with your MSP that you helped build and grow over there in Wisconsin. And what's the biggest, I don't want to say obstacle or challenge, but what's the biggest change shifting from being in an MSP to a vendor to MSPs?
Wow. It's what's the biggest change going from riding motorcycles to riding horses to driving cars? I mean, it's just a radically different world being on the one side or the other. But I love both worlds. When I was running an MSP, that was a great time. Didn't always feel like it. As anybody who runs an MSP knows, it's an incredibly challenging business, especially certain days. You'll think life is great. I finally figured this thing out. And at about 4:30, you'll get a call from your service manager, from a key customer or head of sales or something that tells you you in fact have not figured this thing out. And life's gotten really interesting and all the plans you had for the rest of the day and the week and everything are changed. Um, so running an MSP was a great ride for me. The last 3.5 years being in this role has been incredible as well, and for very different reasons. In this role, you have to take a different perspective and look at things at scale in a way that, and I'm now part of a 3,500 employee organization worldwide, as opposed to our MSP was pretty good size, but we were 85 employees when I left. We could make decisions quicker, we could pivot quicker. There's more considerations we have to factor in now. But that being said, the ability to impact others is what motivates me the most. And I guess maybe more specifically, the ability to positively impact others. Um, and so I loved back when I was running LockNet, I loved it being at conferences and being able to sit down with other MSPs and be able to help an MSP through an issue or something they were struggling with. Maybe we had struggled with it 5 years earlier at some other time. That was always really rewarding to me. Well, now in my current role with IT Nation and with service leadership, I have the ability every quarter to directly interact with hundreds of MSPs and have those kind of discussions with them. And potentially, given the scope of the benchmarking that we do and the scope of our IT Nation events, be able to potentially help thousands of MSPs. So, and that's really giving back what was given to me. When we were originally running LockNet, it was challenging. We were doing a turnaround. It was a failing MSP at one point financially, and we were able to turn it around through the help of many others. And so being able to give back to the community that gave us so much is something that is really, really enjoyable and rewarding for me. So that's been great.
No, that's awesome to hear. I mean, for people who don't know your story, you did some amazing, you and your team, did some amazing things to make that MSP practice what it is today, and it's still fantastic, largely built on the work that you and your team did over a decade, right? I mean, I think I first met you in 2011, 2010,
Yeah,
maybe.
yeah. Yeah, I got
Yeah,
there in June of 2010, and we met sometime either that fall or maybe over the winter,
yeah.
and so I was there for, just over 11 years.
Yeah, that's incredible. I do want to get into now you have a bigger vantage point, shall we say, in the MSP universe. And one I'll add that not that many people have, right? There's not a lot of people who have that view, that vista of MSPs and access to information. I want to start not by naming names, but it chafed me to no end about a year ago when another executive in our sector basically said that MSP margins are so low and so horrible that we need to do something. And they did something that I'm not going to say because you would know who they are. But what the underlying thesis was, the MSP business margin is bad. And that was like contrary to 25 years of experience. And I thought this has got to be just marketing, kicking up dust, for the sake of PR. I don't know if you're familiar with this, but what's your thought of general health or the underlying foundational health of the business model of managed services? That's the question.
Am I familiar with the statement that was made? We'll say hypothetically, yes. I don't think you could be in our space and not know what you're referring to or who you're referring to, of course. But generally speaking, look, my position on the MSP business is it's a great business. It's a great place to be. And if it wasn't a healthy business with healthy margin opportunity that presented itself for every MSP out there, then you wouldn't see the billions of dollars of private equity money continuing to come into the space over an 8 or 9 year period. I mean, these are smart investors. They're very, very sophisticated folks. And for them to be pouring the kind of money that they are and continuing to. There's an unbelievable amount of dry powder that's in the space right now. So why are they doing it? Well, they're doing it for a few reasons. One is that they believe that this is a highly recession resistant industry. And I hear the term recession proof thrown around a lot. It's not recession proof, but it is recession resistant, particularly if the higher percentage of recurring revenue an MSP has. Our definition says that to be counted as an MSP, you have to have at least 40% of your revenue coming from services. And the largest percentage of that needs to be infrastructure managed services. I know there's other definitions out there that other companies have that say if you have one customer on a managed service contract, you're an MSP or 10% of your revenue or that kind of thing. But for us, we have a very specific definition, at least 40% services and so forth. Well, the average MSP today has around 50% of their revenue tied to managed services, and let's say another 20% to 25% tied to recurring cloud services. That would put your recurring revenue, including managed and cloud, at about 75% of your revenue. If there's a recession, a true like 2008, 2009 style recession, that recurring revenue over a period of 2 to 3 quarters is going to drop. It's going to drop maybe 15, 20%. But that's going to happen gradually as your customers get rid of some of their employees and that kind of thing. And you can react to that as an MSP. You can not backfill some of the turnover you have. You can do some different things to really manage through that so you can maintain the profitability of your business. On the other hand, if you're heavily dependent on hardware sales or project revenue, and there's definitely still plenty of VARs out there and project infrastructure shops and app dev shops that are relying on projects, that revenue is going to take a much faster and deeper hit. And so managed services is a good place to be. That being said, the best in class over the last 15 years has had EBITDA of 2.5 times that of the median. And the bottom quartile, the majority of the bottom quartile folks that we benchmark don't make any money. So there's still too many folks out there that are working really hard and taking on a bunch of risk and putting a lot of blood, sweat, and tears into their business, and they're either not making any money, or maybe one quarter they make a little bit, another quarter they lose a little bit. So over a course of a year, they're not making any money, or maybe it's 1, 2, 3%. And if you're those folks, you need to figure out your gross margin. But the the premise that that gross margin in your as an MSP is going to be significantly impacted by your cost of tools is is a ridiculous premise. 80% of your gross margin for an MSP, if you're counting gross margin correctly, 20, 25% of it's going to be tools cost and training your techs and some other hard costs. The other 75, 80% is the actual cost of your labor. So I can show you a model where you increase the cost of your tools by 20%, or one that you even double the cost of your tools, and you get a 20% efficiency lift on your people, and you actually make more money. And focus on your efficiency as a business. Don't ignore the cost of your tools. Don't buy things for the sake of buying them and just pay more than you need to pay. But don't put your organization through a tremendous cost of switching and all those things unless you're going to get the benefit. And the benefit has to be in the efficiency and other things that you're going to gain for your service org.
Yeah. So, hey, thanks for saying that and setting the record straight. So, for anybody out there who is really suspicious about whether it's still good to be in managed services or getting into it, you heard it from Peter yourself. Peter, my thought is based on what you just said that a fair number of companies, I'll call them collectively service providers, who are feeling pain, maybe over leveraged on non-managed services revenue customers. Is that a fair statement? Something you want to, do you agree with that? Or
So you're saying that they're still doing project work and all of that for non-managed
they think they're
customers?
an MSP. They have all the MSP tools. They may be a ConnectWise user or not. They have all the trappings of an MSP, but things still feel wrong. And in my experience, I'm trying to figure out if that's yours as well now, that those may not be necessarily badly run MSPs in terms of the services they're delivering. They just have too many non-managed services customers in there, and they're not feeling the good side of what you just articulated.
I mean, the old saying, profits flow where focus goes, I'm a believer in. And so we benchmark 10 different business models of TSPs. So our two largest sample sets are MSPs and VARs. And the definition of a VAR under our definition is 60% or more of your revenue comes from product, including recurring and non-recurring product. But we benchmark 8 other business models. We benchmark project shops. There's still a bunch of break fix shops out there. We refer to those as technical services and TS revenue. There is a lot of app dev going on. And so, as a general rule, whether you're a VAR, VARs are a whole different animal. The economics of what drives success, they're really, really different from an MSP. But let's say you're an MSP and you want to maximize the chance of success, maximize your focus. And what we, as a rule, what we see is MSPs who do a little bit of app dev do well on the MSP side of their business, and they get their brains beat in on the app dev side. App dev shops who do a little bit of managed services do well on the app dev and get their brains beat in on the managed services piece. So my general advice is, unless you're large enough to afford to build a completely separate factory within your business and have it run on its own margin numbers and everything, don't try to be something for everybody. It just doesn't work out.
Good advice. Good advice. I want to get your take real quickly on AI. And I overheard a conversation of literally of two people in a street at a cafe talking about AI being a decimating, destroying effect on the technical sector. And I don't think that these were technical people. They were just two women having a conversation at a coffee shop. It's come up in MSP conversations that I've had, I guarantee you've had similar conversations. What's your take on the impact or lack thereof of AI on MSP technical or MSP professional compensation, if that's something that you guys follow?
Yes, it's come up once or twice.
Figured it would.
Yeah, the so a bunch of thoughts on AI and what we're referring to as hyperautomation, which is really AI, it's RPA, it's other ways of automating what you do. Definitely have a lot of thoughts on where it's going to take us. So first of all, my general sentiment is to those who believe that the four horsemen of the apocalypse are riding in for managed services as an industry and they're riding in on horses of AI. Think back to other times in the industry. I remember, and you remember this, Charles, I remember in 2010, 2011, to my first few industry events and how unbelievably depressing they were. I'd go to these events, go to CompTIA or go to these other events, and you'd sit down at a table to talk to somebody about who's been in the industry for a while, and you get an earful about how, yeah, it's been a great run in managed services, but the industry's going away. Microsoft's getting rid of SBS server and this
Small business
cloud
exchange
thing.
server, the lifeblood of MSPs. Yeah, you're right.
The cloud is going to put us all out of business. They're not going to need MSPs anymore. And you go to enough and you listen to enough of these folks after a while, you're like, wow, maybe there's something to this. It's a huge sea change for the industry. And the analogy that I make to it would be the onset of RMM products. That back before RMM hit the scene, there was a very specific economic model for providers I mean, we could say they're MSPs. They were really not, we really weren't as an industry back then. But think about the economic model back then. It was built on putting bodies on site. It was built on how quickly can I get to a customer when they're down and need to have something fixed. Building contracts that included some labor weekly and maybe it was block time and all of these different things. And so what drove the revenue model and what drove gross margin was really fundamentally different. All of a sudden, RMM hits. Now, why do I need to put somebody there on site? I can do 99+% of what I do remote. Therefore, why do they need to be a half hour or an hour away from my office at most? I can now service customers who are hours away from me. The model and what goes in, we can start doing all inclusive managed service offerings. So we went through this transition as an industry and we really learned the economic model. And today we've got 10 years or more of data on what gross margin should look like and what efficiency gains should be in your organization as you grow, and some of these other things. We know what drives success. AI now is here and it's changing the model again. And so, what AI is going to do first and foremost is it's going to really bring efficiency gains to level one techs. And I talked to a lot of providers, I think, as an industry, including service leadership, some of the guidance we were giving a year and a half ago. I think we all expected that the gains would be here faster than they really have materialized, but that doesn't mean they're not coming. The tools are advancing that allow it. The knowledge of how to implement these tools is growing. Providers like ConnectWise, like our parent company, are putting a lot of money into building these kind of tools into PSA and into RMM tools for everybody. So the opportunity is still there. It's taking a little bit longer to get here. But frankly, we probably would have said the same thing in about 2010 or 2011 about RMM, right? In hindsight, it seems like a rapid and logical advance of the industry, but back then we didn't really see the gains yet and didn't really know how to price it and how to build
Yeah,
it. So it's evolutionary.
I think it's a great point, and I would also add that I think there's been to your point of it's the benefits are slower to materialize than people may think. I sense that there may be a expectation from some of the less mature providers out there that AI is going to magically make me efficient and give me a process that I didn't have yesterday. And from talking to MSPs, they seem to be saying, if you have a process, there are ways to automate it, tools to automate it. But if you don't have the process to begin with, it's just not going to give it to you and make you smarter. At
No,
least
it's not. And you're going to have to dedicate resources to implementing it. One interesting data point that we've been talking about a bit the last few months, those who benchmark with service leadership, one of the KPIs that they're very familiar with is what we call the service multiple of wages. And we calculate what the top quartile profitability shops are doing in each of the 10 business models. It tells us how well run is their service factory, how efficient is it. And there's only two inputs to it. There's total service revenue. So you add up your managed service revenue, project service, break fix. So all of your service revenue goes into one bucket, and all of your service wages go into another bucket. So all of your techs, your VCIO or TAMs, anybody who's doing post signature support of your service customers. So you put all those wages into the other bucket. Well, for every dollar that you're spending on wages, best in class says you should be getting at least $2.50 of service revenue. Okay. So, what's interesting as it relates to AI is if you go back 5 years and look at the best in class, median, and bottom quartile, the best in class has been steadily improving the service multiple of wages number even without AI. And so they've taken that thing up from 2.5 to today, it's about 2.9. So they're getting almost $3 of service revenue for every dollar of service labor. The bottom quartile has actually gone down over the last 5 years. They were at about a 1.9, they're down to about a 1.85. And, and the median's gone up, but slower than the best in class. So, how can you go down at a time when all of the same tools are available to you, all the same knowledge is available to you?
you're selling
It's
a
how
different
you run your
product.
business.
Yeah, you're selling a different product, delivering a different service is the only thing I could think of that would account for that.
Well, there's a lot of things that go into it. There's only two levers. That's the cool thing about this KPI. It's your revenue and your service wages. So you're probably not charging enough. You're probably hiring too many level 2 and 3 techs. You probably are selling to too many different sizes and shapes of customers, so you can't service them efficiently. You probably aren't that disciplined on your tech stack, and your people have to support a lot of different manufacturers. So there's all of those different things if you're bottom quartile. The point is, the as AI really hits and as hyperautomation really hits, 2, 3 years from now, best in class service multiple of wages will probably be about a 3.2 to a 3.4. Bottom quartile, it'll still probably be a 1.9, right? Because the best in class are constantly looking at how do I make my business run better? How do I become more efficient? And they're already doing that prior to AI. They'll keep doing it and they'll see the results faster than anybody else.
Yeah. I no, and I'm assuming, Peter, this is a international data set, correct?
It is. Yeah. Yeah. We
Okay.
have the largest and deepest data set on a quarterly basis.
Okay. Perfect.
We've been doing it for 20 years too. Service leadership this year is the 20th anniversary of, and so the amount of data that we have going back is amazing.
Yeah. No. No. I know you guys have been around for ages. That's really interesting. I think so. Basically, the takeaway is AI is not going to put you out of business. If anything, it's going to give you maybe not time, but give you the impetus to upskill and get certain people into a different mode, a more valuable mode inside the MSP practice. Fair to say?
It is. Yeah. If your MSP um, help desk operation is built correctly, you should have a ratio of level 1, 2, and 3 techs that says that, let's say you have 10 techs. For every 10 techs you have, about 6 of them should be level 1 techs, about 3 of them should be 2s, and maybe one of them's a level 3 tech. Okay, now, first of all, bottom quartile, we tend to see an inverse ratio of level 2 and 3 techs. So we'll see a lot more level 2 and 3 techs and fewer level 1s. But assuming you built your pyramid correctly, so think of it as a triangle. The first wave of hyperautomation should take those level 1 techs, and maybe if you had 10 techs before, maybe you'll be able to service the same number of customers with 4 level 1s instead of 6. or five, right? You're not going to need none of them. You're going to need level one techs. You're going to need two and three techs. Over time, you'll probably see some efficiency gains in the next wave, maybe 3, 4 years from now, in level two and three staffing as well. So it's not going to cut jobs for you as an MSP. What it's going to allow you to do is if you're running, and most MSPs do, about 15 to 20% turnover on some of those positions annually, you'll be able to do a phased implementation of this where you're just not going to backfill as many techs as fast, and you're not going to add new techs proportionate to your growth quite as fast. And you'll wake up in 2 or 3 years and your model will look a little different. It'll be more efficient. It'll be more profitable.
Yeah. So I think this is really good news. I mean, well, it's good news to have someone other than me saying, "Hey, the AI is not going to kill the world and go, like Skynet, become self-aware and put everybody out of business." That I don't know if you remember that. That was a somebody like 20 years ago at one conference said, the technology is going to make a self-healing system, one day. And I I looked around and like nobody was buying that one.
Yeah, well, we'll see.
We'll see.
Whole
We'll see.
different conversation, Charles. But until that time, MSPs will be needed.
Absolutely. Let's turn our attention to the economy. I mean, wages are staying healthy per what you said, and if you're certainly in that top quartile. We're in the middle of a recalibration of global. Yeah, go
Well,
ahead.
we just came out, Service Leadership just released our annual compensation report, and that's a global report. And all of the data we collect from that comes from MSPs, and VARs. So it's all TSP data. So there's no enterprise or government or anything. So we get a really good look at what's going on in wages, and we can look at it by geo and everything. The great news is wage inflation worldwide peaked in 2020, particularly in North America and in Australia, New Zealand. It's been coming way down. So the top level increases that everybody was doing to keep their people in 21 and 22, we've come back to earth and more of a normal time here. The only exception is really Europe. That's proven to be pretty stubborn on wage inflation. But in this market, we've seen 3 straight years of improvements. And 25, it looks like it's going to be a really good year for that as well.
That's actually really good. Yeah, can anyone get your report? They have to be a subscriber to Service Leadership.
Oh, no. One of the neat things with the comp report is two things. Well, that's a bit of a contradiction, right? One of the neat things is two things. You can buy the report. It's 2000 and we have some discounts running. Just go to service-leadership.com, and it's about a 500-page report, but you don't need to read all 500 pages. A lot of that's geo-specific stuff, so you can find your section. There's also a really neat analysis on the difference with how the best-in-class profitability guys pay their people versus how the bottom quartile folks do it. There's some real marked differences, but you can buy the report for 2000 US, or and then in future, every October 1, we open up the portal to collect data, and we close it at the end of November. If you put your data into the system, you'll get a free copy of the report when the report comes out. So it's a great deal.
Okay, good to know. It would seem to me then, it would seem to indicate that with wages staying strong, meaning that the market's not falling out and MSPs are running for the hills, that and based off of talking to our certified member community, they seem bullish across the board. With one exception, there was a Canadian MSP who was a little unhappy with things, and you could see why
Sure.
would be
Yep.
unhappy, but not necessarily attributing anything to loss of business. There's just maybe more of the status of things. But MSPs are generally pretty happy. Are you seeing the same thing in your community?
Well, I would say, I don't know about happy, but I would say as an industry, I don't
Optimistic,
know that
shall we
we're a
say?
notoriously cheery bunch, notoriously conspiratorial maybe, but um, the what I would say is I think the MSPs recognize that we've been living in some pretty good times the last few years, and that things generally are overly we're overly cooked for a few years for revenue growth and inflation, and seeing things come back to pre-COVID levels for revenue growth, which is about where they are. We're seeing managed service revenue growth, organic revenue growth right around 10%, which
Not
is
bad though, right?
no double digit. is still pretty healthy as any industry goes, and that's off of a bunch of really good years of growth, some outstanding. So seeing that year over year growth rate sustain itself and continue, I think overall the industry is pretty happy. I will say though, the tariff news and some of the we have seen some concern in the past couple of weeks that to a greater degree than we have seen for a while. And my advice to every MSP is that service leadership has a lot of guidance on being prepared for the whatever is going to come along and hit you as a major body blow. If there's going to be a huge economic downturn like there was in early days of COVID or in the Great Recession, or what could come because of tariffs, who knows? Be ready, right? And be start preparing. If you haven't been, today's the best day to start preparing. Our newsletter in Q1 was 5 years since MSP saved the world, and we went back and looked at the that came out on March 11th, which was the 5-year date when the NBA locked down and canceled the season, and NCAA, and that was a Wednesday night. I remember it really vividly because we had a big management training event starting at 8 a.m. on Thursday, and we got up that morning and saw the news, and we decided to cancel the event. And so that week was really when things changed, and MSPs were forced into massive high gear to help millions of employees of their customers to work from home. We have the second half of that newsletter is a financial resiliency planning guide that's free. I would advise any MSP out there that go to service-leadership.com. You can reach out to us. It's a free quarterly newsletter. Sign up for the newsletter, but download the Q1 newsletter and read through it and really be prepared because there's going to be, whether it's the tariffs or something else, there's going to be some major shock to the economy, and be ready. You can be prepared for this.
Yeah, I think that if you're a shop that is heavily leveraged on projects and not so much software, but maybe hardware sales, that yeah, you could be seeing some real trauma. Although we'll see. I mean, the markets are up as of just not that long ago,
Yeah.
so we'll see.
Yeah, we may still, even if the markets back up, even if there's a pause on tariffs, we may still see that shock to projects because businesses that are concerned or just have any general trepidation, they cancel or delay projects. It's awfully hard to cancel managed services. I still need my IT to run right. I still need security, but I can easily call up my MSP or my VAR and say, hey, that project we were about to do, let's hold off on that for a couple of quarters and see how things shake out. And so that's exactly what happens when there's an economic downturn.
Yeah, I get back to your point. You said MSPs are not recession proof, resilient or resistant, and I think that that's absolutely spot on because if you've got a good percentage of your revenue from managed services, yeah, so you lose a project for a month or two or a quarter, you'll pick it up later, but the underlying revenue is still coming through. Your value is still there.
Yeah, it's what our data showed from, if you go back to the Great Recession in '08, that project revenue from both non-recurring products, so mostly hardware, and from project services dropped about 45%, and it did it within 1 to 2 quarters. So, and it's because a company's doing exactly what we just talked about, that I'm going to push this thing until I feel a little more comfortable about my business and my cash flow, etc. Managed services dropped about 20%, but that took about 2 to 3 quarters, like we talked about. So, yeah, there's a drop that will likely happen, and you want to be ready for it. You want to know how prepared your business is and how resilient you are. But the biggest way to mitigate it is to have a higher concentration of revenue coming from recurring revenue, including primarily managed services.
There you go. I can't add anything more to it. I agree with it, and it that has stood the test of time for 3 decades. I mean, since when I've been in this industry since the dot com shakeout and through all those momentous events. In closing, Peter, just as you see the next 3 quarters of 2025, I'm not asking you to make a prediction of where we end up on the stock market or tariffs, but what things should MSPs be looking out for to make the most of this year, maybe from a financial or business operations standpoint?
I'd be looking at really two things primarily. Number one is how can you get more efficient? And I gave one metric to measure that efficiency gain. There's certainly others. There's endpoints per tech and other ways that you can measure. We capture all that data too. But if you don't know how efficient you are and you don't know how your margins measure up, then I'll put in a little plug for service leadership. You can sign up and start benchmarking, and it's really affordable. You can get it with certain peer group communities, but know your data, know how you stack up. And once you do know your data, make a very concerted effort to drive greater efficiency and greater gross margin into your managed service operation and into your service team overall. So that's number one. Number two is even if there's a downturn, continue to invest in sales and marketing. That there's going to be opportunities for growth that will help offset some of the losses that you're going to have with your customer base. And if you can stay really solid on sales and marketing and just stay really focused on continuing to grow your business, even during a downturn, at some point the downturn will end and you'll be able to springboard forward as things start to come back instead of waiting around and really, really cutting back on all that and then starting to invest again in sales and marketing. So those would be the two things that I would advise to any MSP out there, Charles.
I think that's fantastic advice. Go to Service Leadership, go check it out. Doing great work. And Peter, if you, I'd love to have you back on in the future because I think these are not that many people talk about this stuff. Get to geek out on the operational financial stuff. So I'd love for you to come back on the program.
I would be
Your
happy
busy
to, my
schedule
friend.
permits.
Anytime. We have our annual profitability report for the industry coming out in May. We'll make sure that as a data geek, you get a copy of that, and that's also available for purchase. And then we have IT Nation Secure coming up in June. So hopefully we can see you there and catch up.
That would be awesome. Peter Kujawa, always a pleasure, my friend.
Likewise, Charles.